I don't know. My dad's biggest thing when I got into it, he's like, you're at home with us. You don't have too many bills. Your car's paid off. Like, you can trade right now and make money. There's no pressure. Like, that's the biggest thing for me. Like,
Right.
I tell Jack all the time is like, he would always say like, what if you had a mortgage and three kids you need to eat and a wife? Like, how can
Hmm.
you still trade under that pressure? Like, things are easy right now. So that was around January, February when I was doing okay in the hot market. And he knew how hot it was. And he's like, yeah, but what about when things are slow? This won't last forever. So that's when I really like sat down and I was doing okay in the hot market. I was like, how am I going to make a living for like the rest of my life?
How's it going, traders? Matt Monaco here from Twist, announcing the 2021 Twist giveaway. Over the last year, Twist has put out a ton of episodes that a lot of Stocks Trade fans and traders have loved. So to give back more than we're already doing, Kyle Williams, Jack Kellogg, and I are hosting this giveaway. It's very simple. There's a link in the Stocks to Trade bio. Click it, put your email in, and sign up. And one special winner will join us on the May 27th Twist episode. You can come on live, bring your trades. We'll go over our trades and just be a member of the Twist host community. It's a really great opportunity. So make sure you go click that link before the offer expires.
How's it going, traders? Matt Monaco here. Another Twist episode. As you can tell, Mr. Jack Kellogg is not with us. I believe he's actually currently in the shower. Sorry, Jack, for exposing you to the world. But we've got two very special guests, Stratty and Ben. Ben was on the show before. Stratty hasn't. That's correct, right? So he's coming back. He'll fill us in on just, I don't remember the episode, but just on your journey since then. You had a really small account back then, had some good success. So we'll break that down, let you explain your journey a little bit, go over some trades you took today. And I'm sure you've noticed I'm in this sweet new office, at the podcast studio down at Stocks to Trade. Yeah, so Stratty, Ben, choose who goes first. And then, break down your story. Brief overview probably of how you got started and where you're at now. Love to hear it. Sweet.
So last year I was on when I was visiting Jack. I think that was in the end of June.
I believe. Sorry to cut you off. I think we had Ben on when we went over the Q&A session, right?
Yeah.
We had like the two-part Q&A section. So if you, back in probably last June, right? What was it?
Yeah.
Go back in the Stocks Trade channels and try to find it. But it was a two-part series of questions. So.
Yeah, that was called, if anyone wants to look it up, it was called Trading Small Accounts. I think that's what it was. And then it should be on the Stocks Trade channel. But around then, so just to kind of fill you guys in. So at that specific time last year of June 2020, I had a small account and I had split them between two, and one was a short selling account and one was for going long. And it was about 7K total between the two. And I was just kind of finding some consistency, but still had some rough patches and just wasn't really able to grow it as much as I would like to. And so I just went forward that year, and I took a lot from seeing you guys kind of blow up and going exponential and just trying to take what I could there. So I had grown the small account after June, end of the month at about in between 7 and 8K total. And by December, it had gone to close to 15K, but I was still struggling with that 15 to 25 mark, and just getting that little nudge over the 25 mark to get over PDT and trade freely. So I was struggling with that. And now I am over PDT, and I'm about 20,000 away from crossing 100K. So I'm really excited about that. And just to fill in those spaces, because I was really going through a lot and kind of battling a lot of decisions in my head of like, what should I do? Like, I'm saving up. I was really stressing because I saw the market was heating up and I was just running out of day trades and I wasn't able to capitalize how I would have liked to. So I remember the day, and you probably remember it, Kyle, especially, and it was in late November, and it was like short seller heaven. It was when the EV sector was finally pulling back. It was like BLNK, FCell, a bunch of other ones. Like, you could literally just short any pop and you could make 20, 30%. It was insane. And I still had a sub PDT account at the time. And Jack hit me up. He was like, dude, like, did you kill it today? And I was like, bro, I made $100, So I was like, that was kind of the final straw for me right there. I was like, based on how I trade and how I've learned from other people, like, I know that I need to get myself over PDT, and like I just was really trying to believe in myself that I could get there. So the following week, I wouldn't really recommend this for anyone, but just to be transparent, I did go and just get a loan just for the rest, because I had about 18K to my name. I put in everything I had into my accounts, and then I got a loan to put me over PDT, and I was still working at the time, so I had a passive income to pay for that. And just ever since then, the market started heating up for OTC specifically in December, and I was able to pay the loan off very quickly, just with the opportunities presented. And I've just been finding consistency in the OTC market ever since late November. So it's been great to experience all that, and I'm super grateful for the journey so far.
Couple comments
Awesome.
before we go over to Stratty here. One, you said your job was passive, which I just think is funny. Just the mindset shift there.
Yeah.
Most people would not consider a job passive income. Two, just like the stress of taking the loan, right? Like, again, you threw out the disclaimer, like, wouldn't recommend it for everyone. But for you, was there that additional pressure, that additional stress? Did it affect your trading at all? You know, what was it like for you?
I was definitely super weary about it, because I was like, man, like now that yes, I have the buying power, I'm over PDT, I can trade freely, but at the same time, you know, I have that buying power, and I could easily just be like, yeah, this trade is going to put me over. Like, this is going to give me that cushion I need, and I could oversize on it, and just big snowball effect could go on there. So there was definitely stress leading into it, but I was just trying to tell myself, like, just trade the same, do the same things that you would normally do, follow your process, and you can get there. So I was trying to be very disciplined with that, and I was just sticking to sizing up on my A+ plays and keeping risk as tight as possible. So that's usually how I went about that. But it was certainly a little scary in the beginning, but I saw the market heating up, and I just knew that, like, I had to do it. And I feel like to really just push me over the edge, I guess I had to burn the bridge behind me.
Right on. I personally, in my story, I know, to answer Matt's question, I never wanted to take out a loan specifically because I was just paranoid about it. Like, I didn't need one. You know, it was more just I knew it would take longer for the same just over a longer time frame. For that reason of, like, I definitely going to trade differently, and I'm saying to myself, I don't know if that actually would have played out. But for listeners, like, I also know a lot of other traders who either do take out loans, which again, I don't recommend it. Ben just said he was random, but he was able to do it. So it's a gray area. But if you either take out a loan or have like a family member loan you money, I wouldn't even trade that money. So if you had, like, Ben, you had, what was it? You said a $15,000 account, $18,000 account?
Yeah, it was 18 at its peak before I had added anything into it.
Right. So then now you could have maybe you could fund it with whatever source of income or source of money that you get, whether it be a loan or a family member, but then you only trade with 18K. That way it's like you're kind of, again, that's up to self-discipline of controlling your account and risk, but at least you're not ever seeing that money as actual tradable money. You're just using that to get over the $25K amount. And from there, you can then trade your own portion of the account. That's how I've heard a lot of other traders do it as well. So. Yeah.
And another thing, just to add to that, so I still had 2 accounts at the time. And so I opened up a speed trade account, which Speed Trader Cobra Center Point is all 25K to 30 minimum. So I still had my E-Trade for longing, which was primarily what I was doing back then anyways. And that was still a sub 10K account on a cash account. So it's not like I was, I almost had a little bit of a hindrance, but I knew that if I needed to, have a good opportunity, I had it in my other account. So I think that definitely helped me a little bit by not getting overly aggressive on a lot of plays.
Right on. Cool.
Stratty, what do you got for us?
I started in late 2019. I started trading like listeds with like a $1,200 account. I would like YouTube how to buy a breakout, like what's the first green day. Like, I refused to pay for like a psych service. I thought it was all scammy. And then I wasn't making any progress. Obviously, like, you'd have the 3 day trades a week, and I'd blow them in the first half hour of Monday, and I was down like $300 or something like that. And then at the same time, I was a full-time teacher, so I didn't really have time to take it on anyway. And then COVID happened in March, and I knew Jack from like friends of friends. So around February, he said, like, I'll help you like learn how to trade. We'll like get you in the courses, like do your thing, but you gotta like find time. So I was teaching, then COVID happened. So then I was home full time right around March, funded the account to like 7 or 8 grand and just like called Jack. Was like, I'm down to learn. I have all the time. I'd have like the kids on one screen, like just monitoring, and I have like a chart up on the other. Like, really bad. And then right away, that was the COVID sector. Like I walked right into it with no experience, and just you could slap anything at 9:30 in the COVID sector and make money. They just said they were going to cure COVID. It moons 40-50%. I did that up until May, grew the account to like 15, 16K, something around like that. And I was adding to it every day because I work at night, like as a bartender. And then I really slowed down because I really didn't have an actual fundamental basis for what I was doing because it was all COVID stocks. So August, July, September, like I really like fell apart and wasn't making any money. I wasn't like blowing up, just no progress because I didn't really learn how to do things the right way. Like I would wake up at 9:25, see what had the COVID PR, slap it, buy the first dip, and you can cake it all day. So September, October was tough. And then I started to get back in the groove. I really slowed down and just tried to learn the ins and outs. I was working with Jack, Mari, Scott, learning from Sykes. I learned the framework in and out. And then November, things started to pick up, but I was never like crazy consistent. Like I'd have a few good days, give back a little, few good days, give back a little. And I really wasn't consistent in the hot market. My best months have been March, April, May, which is like when everything slowed down, which is interesting. But I do way better in a slower market now that like I had time to refine like a process, and like we're doing way better that way. When things were hot, I was still learning. So like, when things are hot, you don't have time to like really learn the ins and outs. You're just slapping and asking questions later. But March, April, May, it's been really slow, and you can like focus on one trade, review it, like do it the right way, and it's just working out way better now. So
That's a good point you make about your journey strategy, because I think, at least for my personal journey, was losses right away, whereas for yours it was maybe a little more gains because again, the hot market. But I like that because no matter what time you start, whether it be hot or slow, if you stick around long enough to eventually trade for a living, which is a lot of people's goal, like you will face that period of struggle and that period of really truly your learning curve. So it's awesome that you've struggled through that, and obviously, like you said, you weren't blowing up. You weren't giving. The best thing you probably did was not give away the profits you made, and still be able to learn. And now look where you are now. Like you said, you're having your best months ever. So that's awesome.
I don't know. My dad's biggest thing when I got into it, he's like, you're at home with us. You don't have too many bills. Your car's paid off. Like you can trade right now and make money. There's no pressure. Like that's the biggest thing for me.
Right.
Like, Jack all the time is like, he would always say like, what if you had a mortgage and 3 kids who need to eat and a wife? Like, how can you still trade under that pressure? Like things are easy right now. So that was around January, February when I was doing okay in the hot market, and he knew how hot it was. And he's like, yeah, but what about when things are slow? This won't last forever. So that's when I really like sat down and I was doing okay in the hot market. I was like, how am I going to make a living for like the rest of my life if I wanted to do this? This won't be here forever. So that was the biggest thing. That's probably why I'm doing my best now, is because I focus on like 1 or 2 setups that I thought could keep me in the game forever. Like they don't need to be there, and just like capitalize on those. So the goal is to like be sustainable. I don't really care about a hot or slow market. You got to be able to wake up every day and make a living for your children. So I traded like a 40-year-old dad with a mortgage.
I love it.
No, that's a good line. I mean, the viewers like watch that again. There's so many like good one-liners, buzzwords. Like, I would recommend everyone watch that again. No matter where you really are in your journey, how they approach the market, like how they grind it, how they like, yeah, maybe there were some loans, yeah, but like they had extra jobs on the side. Like they didn't put their chips all in on the table, because like they had backup plans. They had some safety nets. They really wanted. I mean, he trades like a 40-year-old man, for goodness sake. Like they wanted to make sure they were in it for the long run. It wasn't just some get rich quick thing. And yeah, maybe strategy here. His strategy in the beginning was just slap anything with a PR, which is how a lot of people get started. Like, I mean, when I started, again, I'm pretty open about it. I thought I was going to be rich by the end of summer, and that clearly didn't happen. But eventually, like if you like it, you learn like how to have this long-term mindset and how to be sustainable, like Strategy just said. And they did a great job of that. It's really awesome to just see the success you guys are having, even in the slower market. Like, it's been slow for slow, I'm going to put in air quotes here, but it's been slow for the last month or two. They're still seeing some really good success. So it's awesome.
Yeah, there's I agree with Matt saying watching that back for those two guys' stories, because there's parallels not only in theirs but and I think you could agree, Matt, in ours, like what Stratty just said about having, both you guys saying, a job to pay off other expenses, not living home, being young. I think that's why so many, I've said this multiple times everywhere. I don't even know where I've said it, but I've said it a lot, about just why generally younger people have a better chance of success earlier on. Because, right, you don't have a mortgage, you don't have 3 kids to raise, you don't have a wife. I'm a single dude who learned to trade when I was living at home, living with my parents, still going to college, had a part-time job. If there was a time to trade, it was for me right then and there. And I specifically took classes at night. I specifically took less classes per semester to stay living with my parents longer, to take college longer, so I could learn to trade in a longer period of time. So so many other factors outside of trading that you should be looking at and really accounting for, when you start. So
Sweet. All right, Kyle. I think it's time for some charts here, my man.
Let's do it.
I don't have a ton to add today. Hoping our special guest here can help us out. But I guess I'll
pull up this one.
We
can
can
talk about this one too.
Oh yeah, nice.
Little
I'm gonna start off with
AMC.
AMC here. This is the one I had yesterday. I tried to do a little bit today, and we can go over that in a bit. This classic meme stock ran with GME back in end of January, February. Crazy. It's been coiling up. And today it tried to break out, and I really thought there was some serious squeeze potential here, especially just with these cult type names like AMC had. So I was watching yesterday when it tried to break out, mainly because it had that morning spike in stuff, which is a move short sellers love to short. And then I was like, man, this isn't breaking down. If I was short, I'd be sweating right now. So is this today's move?
Yeah.
Go yesterday.
Or yesterday.
Yeah, pull up yesterday. So that one, as it consolidated into close, I took some shares in Power Hour, anticipating a gap up, because it gapped up Monday, because just people in Wall Street bets talk this stock up all the time. Anytime there's, it's a phenomenon. It's kind of tough to find. You got to make sure you're in the right ones. But Monday morning, if there's, it's hyped on Twitter, it's hyped in Wall Street bets, there's a good chance it's going to gap up Monday. This one did. And people were still talking about it on Monday into the after hours. And I was like, if I was short, I would not like this. So my idea was to swing some. We got this sweet, basically $1.50 share spike after hours. I ended up taking off in 1530s, 1560s from a sub 14 average. And I'm glad I sold into the after hours push. That was basically more than I was hoping for in the gap up. And then today I was kind of thinking the same thing right around noon 1. I was like, man, if I was still short this, unless you shorted after hours, you'd still be in trouble. And they got this little perk and just immediate slam. And anytime you see a move like that, I don't want to be a part of the position anymore. So I cut more or less break even on that one after the slam. I'll still be watching it the next couple of days. I still think shorts are kind of in a bind unless we get a pretty good washout, because even though it slammed like that, it's so close green on the day. Yeah, it's up 1%, but green's green. And short sellers, the longer they hold it, the more nervous they're going to get. It's right under that key breakout too. So we'll see what happens. I'm not married to it, but it's definitely just one that's going to be on my watch list for the next couple of days.
That was a nice move after hours. That was sweet. I saw this thinking oh, awesome. We're actually going to get a solid multi-day runner like it did with GME back in, a few months ago. But looking at this intraday 5-day here, clearly there's someone or multiple people who just do not want it over 1450, at least in intraday, at least in after hours. Clearly they got it way over, but by market open, they've been holding down. So if it ever closes over that level, like Matt said, shorts really haven't had an opportunity to maybe exit. So yeah, I will keep it on watch as well as a short seller. I love shorting when shorts are getting squeezed. So we need shorts to be squoze. So
that's what I'm talking about. Those have been my best longs lately, honestly. Just when shorts are stuck in a bind. I'm not even a short seller, which is so funny, but I've just listened to Jack and Kyle enough, and I'm like, if they were short in here, they would not be a fan. So, so I'll take the other side of that bet.
Right on.
That's all I got for my trades here. Kyle, you got any, or is it special guest time?
Yeah, let's have Stratty and Ben, whatever trades you guys want to go over here. I think you guys mentioned Ton F here and GGII, whichever one you guys want to go over.
I like Ton F, or we could start GG. I had GG out of the open at 5, and then it wicked one little candle to 5.5, and I tried to put in a limit to sell, and I think you can see the bottom wick. It filled me at like 503. I was not happy about it.
Oh no.
Got me. But in general, like the stock was just so beat up and it wasn't breaking down out of open. So once it lost like the 5 level, I was really interested in it because there was just so much range to make money. It had been going down for so long. So the second the bid would start to firm on level 2, I thought it was just a really good risk reward setup. I just botched it, but Ben nailed it way better than I did. So
Yeah, so my trade on that was very similar to his. I think we had almost the same entry at the same time. It was just like a couple minutes after the open there. And instantly I saw that it was holding green. And if anyone else, I'm sure Matt and Kyle, you guys have been trading GGI the past few weeks. It's just been a phenomenal mover. Kind of tough fills on it sometimes, but nonetheless, it's been a really great mover with a ton of range. And it respects a lot of key levels. So as soon as I saw it holding green, I threw on some shares, and then as Stratty was saying, as soon as the bid started firming, I threw on some ads, and you can just have super small risk on those. And I think it's overall really good risk reward trade. But for me, I only made it to 6 cents, only because sometimes, for me, that's a really good move. That's like a 20% mover right there, just in a few minutes. And then of course we can see now it's at 9, but I get scaled out into that 6 area and just took the morning single.
Right on. To clarify though, so when you say hold green, you meant hold the opening price, right? For
Oh, I'm
viewers at
sorry,
home.
it was a gap down, my bad.
Right. Okay. Just
But
clarifying. Yeah.
well, it holds the opening price, and it just pretty much the failure to break down further.
Right
That's
on.
why it
Yeah.
was a pretty good indicator for me there.
Because if we go to the daily chart here, it's kind of like you were anticipating a first green day move for both you guys, as it was obviously sold off for so much.
Yeah, if you can watch the tape and you get like your screen time up, like you can really start to tell when it's not breaking down, and you just play the odds. Like it's going to be the third red day. It's come from what, like 9-10 cents the day before. I can't really see.
Yeah.
Like, if you get
10, 11 cents. Yeah.
Yeah, if you get a nice bid out of the open on the third red day at like the high 4s, it's worth a shot because you can either cut to them and like take a small cut, or you're ripping high 5s and 6s. Like that's really good for a small account, I think. So if you can see how a bid firms and watch the tape, see where there's big sellers, big buyers, like you can really take advantage of that.
Mm-hmm. And even if for me personally, as a long trader, I'm usually pretty late to see moves. So like I wouldn't have reacted quick enough to take any of this move. But if you're slower like me, like this late day move, I unfortunately wasn't watching GGI today, but just seeing how this consolidated and then started uptrending over this like 6.5 level, 6.6, and then 7 cents late day, morning spikes, hold green, and then starts uptrending like this. This is a nice, anywhere in here is a good entry to like get long, and then all of a sudden you get this huge squeeze late day for first green day. So that's just really, you don't have to be early. It's effective to be early in the morning, but if you miss it, don't feel like the play's over. Like keep it on watch, because late day, if it holds up like this, you get this second opportunity. So it's pretty cool to see from this kind of a runner.
Yeah, great trade, great tips there too. Get that screen time up, everybody. Ton F.
Hilarious.
Ton F here.
That was baby daddy right there.
I'll start with this one because I actually did dip by this. Where did I dip by this? I did by this here, right here. And I actually had like all my sell orders at 28.5, and the very high here was 28.5, and I filled nothing. And then as we break low day, that's my risk. So I try selling, and I feel nothing. I feel absolutely nothing. E-Trade was Jack had traded this today, and he said his fills were really, really good. My fills were probably the worst I've ever had to deal with in a very long time. And so fortunately, I tried getting out all in here, just couldn't. And finally it bounced, so I did end up selling into this pop here for like negative 2K. Really, really frustrating, but sometimes there's nothing I could have done. I've never had fill so bad at E-Trade before. Only a very rare occasions on particular tickers it's been bad, and this is one of them. So, and also the good news is that if you've watched my dip buys recently, on some tickers. Like I've really oversized and taken some big losses. Luckily, I did not oversize on this, with the risk in mind of that this might fake out. And even worse than a fake out, I don't fill on the fake out. So a negative 2K loss is like pretty much average for me. So that's okay, even with that much slippage. But that was pretty much my only play on it. Totally whiffed due to executions. So
we didn't try it at that 27 dip. I don't know.
Low 20s, yeah.
We didn't. My first trade on it was, I think, late, like probably high 19s. That last real big dip to 19,
Mhm.
and then like it would be early in the morning, like right after the 27 crack. So yeah, to the left, right in there. That's how we played it a lot. But I mean, it went from a 40 gap to 19. It was worth a shot. There was a nice turn there. I didn't see it at 27. I think when 27 cracked, that was like this could be like a really good lot of range play. So like if you're like trading like a dad, you can get in if you really hit a nice turn and just sell it for quick gains, like really predictable money. So it took it from like 19 to probably 20, 21, if that, on 20K. And then the big trade we made on it was the failed breakdown around 20. So I think it makes a nice high, like still over there by that 19 dip. No, to the left.
Over here.
Yeah, in there, it's still all in there. It like should have broke down towards low a day and it held around 20, like really nice. And then that ripped to 23 something. We capitalized on that really well because I love playing when they fail to break down, like the same way you guys talk about it as a short. Like I know nobody's shorting these stock, like they might be, but after like 20, 25 cents, you guys aren't going to short these that much, or I hope not at all. But
Yeah,
if you
I don't.
same like fundamental, like this should break down here. So when it doesn't, I want to be long because a short would technically be in a bind or they might get squeezed. It's not true, but like that's the thesis I make for it. So we had that 19 low. Every dip was getting destroyed, like the 27 spot. Once we didn't break it, I just put some on around 20 and sold into like 22, 23. Just it had so much range. You could have made plenty of money with the range it had. So just failed breakdowns. When they don't do what you think they're gonna do, just get it. That's how I read it.
Yeah, I had similar trades on it as well. And I think I had a couple trades on it, very similar to Stretty. And I think we hit it again around that 11:30 area when it was kind of, right in there when it was kind of basing. So yeah, like pretty much the same exact thing that he was saying. We guess we're buying it off of that double bottom or higher low, whatever you want to call that there.
Yeah, that's the spot. I can't
Yeah.
see.
Yeah, it was hard to see it, but
That's the real spot.
yeah, he did really well there. I think we both filled low 20s, mid to low 20s, and we get sized out. And we were thinking VWAP for best case scenario, but it was kind of stalling out mid 22, so we get sold out there for a nice little predictable 10% gain. So it was pretty nice.
Yeah, at 19 it should have went lower. That second one down, but it didn't. And that's when you want to like at least take a shot. If you have a bid to back you up, it's really low risk. It's come from the 30s, 40s. Like that's not bad.
Yeah, Matt does this all the time. I'm sure you recognize this, Matt, with listed stocks, like just your first high or low, like it bottom 19 and bottoms at 20, after all this volume went through. And from there, you now have like two nice little, almost, some people would say a double bottom, but I would think it's like a higher low. And like you guys said, that's where you guys got long, and then you just sell into that bounce.
Yeah.
That's so sweet.
Yeah,
That's
give
cool.
us a bid there. Just give me all the shares. I'll take them all.
If it's not going down, it has to go up. So
So my only real decent trade the last 3 or 4 days, if this wasn't for HEZ, I probably wouldn't even be trading this week at all. But HEZ Hertz has been bankrupt ever since COVID, all the way back to, what is it, last year now? Yeah, last year. All the way back, actually, I think even this is when it has this huge run, like everyone on Robinhood was buying it up. That didn't turn out too well for them. And then we went to the OTC market. And then now just recently, they've come out with a really good bankruptcy plan that still has some court hearings to be approved of, but essentially it's pretty promising and unique, whereas most bankruptcies don't let shareholders have any value. But I believe don't take my word exactly for it, but I believe this plan gives shareholders value, or at least shareholders get to keep some of their value. So that's why it was running huge. But again, the court hearing, I think, to finalize it is like a month away. So the stock's just not going to run 100% and stay up 100%. Like it's, it's bouncing ball. Every stock goes up and down. So I was looking for a first red day. Unfortunately, was it Friday? I did give this way too many attempts. Right out the open, I shorted, and as you can see, that immediately proved wrong. so I cut that for a loss. I tried shorting it again up here, was right, and only covered a little bit, and then it just continually bounce back, and I gave more money back, trying to add, thinking it was going to break down. I think I tried one more time, and I was wrong again, and I just called it. Like I took like probably 5 or 6 tries on this, and I lost like 16K on it, 13 to 16K. I can't remember the exact number, but just way too much. And it wasn't because I took any big loss at any particular time. It was just that I tried like 3 or 4, I think even maybe 5 times. And so losing 2, 3, 4K 5 times, like you see how I get there quickly. So that was frustrating. But again, it was weak into the close. We still closed under 7, which was looking like a good resistance level. So I did get short out of the open on Monday. Covered a lot into this low 620s. Reshorted this bounce, and my reshort was pretty bad. I shorted like around 650, and then I'm going to 670. But the red green level was, I believe, 680. So long as it held that level, I was fine staying in the trade. We faded back, double bottomed, and then once we bounced up here, I thought to myself, like, this is going to break down. It should have broken down right there at around 620, and we didn't. So when we kind of faded back here and then made another higher low around 630, and the low was 620, I started covering all up in this. Made like 20K on the trade, so made back my loss from Friday, thankfully. But just was upsetting disappointing, I should say, that it didn't break down. Of course, it broke down today, which I did capture a piece today. But I mean, I was all covered by like $6, and then it went below as to 550. So really got shaken out on this one in many ways, but still green on the ticker, so I can't complain. Just in terms of money left on the table from how choppy it was and how, unfortunately, I pretty much exhausted myself quite a lot up here on Friday. Just a good learning lesson. As to where it goes now, I have no idea. We've had 2 red days now. I'm just probably gonna let it go and let the bankruptcy plan play out over this next month or so.
About time, Mr. Kellogg. That was a long shower, my man. Did you get a fresh shave?
Jack's back.
Yeah, I just wanted to come on here and share a quick lesson about working smart and not hard.
All right, Kyle.
All right, let's hear it, Jack.
Yeah, stop sharing the screen and let's see this guy's pretty face.
I had 2 fine gentlemen with me, trading with me the past couple days, and one was on Twist. Ben was on Twist about a year ago with a small account, and I'm sure he talked about his process and how he's gotten to where he is today. And Stratty, he's been with me a few times. He has a YouTube video out with Sykes. If you guys want more information about him, I think it's, what's it called, Stratty?
I don't know, like top tips from a new trader.
Top tips from a new trader. It was released around Christmas time. I remember that. But basically, these 2 will get way more value out of this conversation than if I was here and we were just doing a regular episode. And I think it's really good, no matter where you are in your journey, whether it's going to be 6 months, 3 months, 1 month, even a week, to just kind of reflect and think more about like what you've done, what you're doing, and where you want to go. And I think it's really good in like these kind of settings where we're making a video and you actually have to think a little bit harder about what you want and where you're headed. So I think it's very beneficial for these 2. What do you guys say? Did you guys have a good time?
Should be a good time.
Yeah, dude, it was fun.
Learned
Always
a
a
lot.
good time with these guys.
Awesome.
Yeah, for
Yeah, it was
sure.
a pleasure, man. Awesome having you. I mean, anything else you guys want to add before we close it out here? Besides Jack's beautiful words, wisdom there.
Oh, that's all Jack had to say. He's out. He's gone. That's it.
That's it. He's out.
So Ben, you're at 80K, and Stratty, I believe you just passed 50K. Is that correct?
58-ish, yeah.
Right on. All right, cool. That's all I want to know. I think you guys you're on the right track. You're clearly both have your processes, and you keep doing what you're doing. 100K is around the corner. It's very, very cool to see.
We'll see where they're at in 3 months, 6 months, 1 year, 10 years.
Yeah,
See how it goes.
we'll try not to
We'll
blow
see.
up in the meantime.
The goal
Yeah,
is to
please don't. You got too good of a process. But
Yeah.
again, appreciate you guys for coming on. If you're new, your first twist, you stumbled into the right place. Make sure you like, subscribe to this channel. Jack mentioned all the other videos that these two fine gentlemen were on. Check them out as well. Especially the Q&A with the small account. That was really cool. It was a two-parter, so a lot of good stuff. And it's a perfect example of where he's come, you know, in the last year since that episode. So clearly there's some good advice there. But yeah, once again, thanks for coming on, gentlemen. It was awesome.
Thanks for having us. It's always a good time.
I hope people take something away. I don't know. Good
Yeah.
luck.
Yeah, listen to the 40-year-old man over here with the process.
Stay in the game.
Absolutely. Thanks again, guys.